morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
A shocking surprise in France. A left-wing coalition is headed to victory in a blow to far-right leader Marine Le Pen. Political pressure builds. More Democrats call for President Biden to step aside as he enters a pivotal week for his campaign. And it's a guilty plea for Boeing. The plane maker admits to criminal conspiracy, readying itself for additional monitoring and a fine. Good morning, Manus.
Danny, very good morning. Not much movement out of Boeing. So the halo effect of a drop of 8 basis points last week seems to have just paused for the moment. You're flat on equities. Two stocks stand out. Obviously, the usual morning market check on NVIDIA for you. How wealthy are you? A rare downgrade on NVIDIA from New Street. It's getting fully valued. Tesla was up for 8 days in a row. There's NVIDIA down 0.6%. Tesla was up for 8 days in a row. It added $220 billion. It's back in the green. It dips ever so slightly this morning after that 8-day winning streak. I talked about the drop of 8 basis points on Friday on the back of the jobs report. Chow down, everybody. You got fives through to 30-year paper coming through on the auction this week. $119 billion worth of, threes, tens, and 30s will come. What is our appetite? What a flatlining response. The guardrails are up. Yes, you have an accession in size and scale for the left in France, but the guardrails are there in terms of their ability to fiscally damage the euro, fiscally damage France. Or that is the assumption at the moment, as the left-wing bloc has the votes, but no absolute majority. So are the worst fiscal risks and Frexit risks off the table? Danny, good morning.
Good morning, Manus. I think that's an interesting point to debate. Is a more left-wing surprise good for this market, or is political gridlock bad, as it means they can't put in some of the reforms they want? For one thing, we know Macron can definitely take this and declare victory. Say, look, I've broken the fever grip that the far right has. But what he's left the country with is the exact opposite of what he set out to do. He said that this would be a vote for clarity. You can't really argue that after this vote we have any sort of political clarity on France.
Be careful what kind of political deal you do. If you decide to step back your candidates, nobody assumed that this would happen. Jean-Luc Mélenchon has said the NFP will implement their programme in full. But of course, they don't have the votes to do that. But there's got to be horse trading. And if you look at the fiscal numbers that he wants to actually spend on minimum wages, a whole host of changes, 179 billion euros, 194 billion dollars. That is what has not spooked the bond markets yet, but you've got to do deals, so there's going to be some kind of fiscal expenditure.
By the way, just talking about the scale of what Mélenchon wants to do, I love this. Paul Donovan at UBS called it 2 Liz Trusses.
There you go.
That's how we measure things now, in a Liz Truss or not.
And there is the interesting point. The bond market, the equity market, and the currency market have been very, very sanguine. So there's no sign of that Liz Truss asphyxiation at the moment. Well, we're set for political deadlock, gridlock, if you want to call it that. The surprise win by the left-wing coalition in this weekend's legislative election. Pollsters had seen Marine Le Pen's national rally winning the most seats, but the far-right party came third behind President Macron's centrist alliance. She believes her party still has a chance for a majority in the next 12 months.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with 3 groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
Let's bring in Bloomberg's Francine Lacroix, who's reporting live from Paris. Francine, great to see you. A beautiful backdrop behind you. Look, this is something that the polls did not expect. It was a surprise for many of us. So what has been the mood on the ground after it?
Well, good morning to you both. I think it depends on who you speak to, Danny. It's very clear that a lot of the supporters of Marine Le Pen, or even of the far left, will have been cheated. So I spoke to a number of chief executives today, and he said, look, watch out for social unrest, watch out for riots. Because of the way the electoral system worked, basically the centrists tried to freeze out the far right and the far left, and so there will be anger in the streets. If you're for the majority or kind of the center, today you're feeling that actually actually, thanks to the French electoral system, you got rid of extremes so that there's not going to be a Marine Le Pen party in charge with a big majority like the markets were fearing a couple of weeks ago. But the concern is what exactly is the way forward? So broadly speaking, and I'm generalizing, you basically have now three big poles: the center with Emmanuel Macron's party, you have the left, which comprises of many left. You have the far left, the middle left, and the center left, and then you have the right, which is really dominated by Marine Le Pen's far right party. How are they going to govern? It will have to be some kind of rainbow coalition, like we've seen often the Italians and the German negotiates. Remember, France is not used to it, so we really don't know who will be prime minister. We don't know how that prime minister will work with the president. There's talk about having a technocratic government, like Italy did with Mario Draghi, but who would that person be? So there are many question marks, and really it's unclear to see the way forward on who will be in charge of France in 1 week, 2 weeks, or 3 months.
Francine, good morning to you. Well, for now, the markets seem relatively sanguine. The euro barely batted an eyelid at this. The bond spread, didn't exactly aggressively move. But what does this gridlock mean versus the far right in terms of a market perspective? Are they right to be so sanguine in terms of the guardrails that perhaps the worst of the fiscal largesse of the NFP may be constrained?
Well, Manus, this is what the fear of the markets was, that you either have a majority from the far right, which meant a lot more fiscal spending, or what they even feared even more was actually a majority of the left. Because if you look at the promises that they put in spending, we spoke to a think tank called Institut Montaigne, a very well-respected think tank here in Europe, and he said if you look at the proposals of the left, they would have spent 96 billion euros a year to put that in place. Now, that is 6 times more, actually, than what Mr. Macron had put in place, and it's twice more than what Le Pen's party was going to spend. So again, because you have this hung parliament situation, because you're expecting a broad coalition, the markets, have a sigh of relief because they don't think there's going to be extra spending. Remember, the EU has already cracked down on France for spending too much. There's a 3% budget limit, and France is already above that at 5.5%. So the markets for now are sanguine, but let's see who's in charge in a couple of weeks.
Well, bond vigilantes tend to stay in abeyance for only a certain period of time. So let's see what the coalition delivers. I've got to say, we're both envious. You've got a gorgeous backdrop there. It's certainly better than perhaps the heat that we've got here. Francine, we'll see you through the morning. Great reporting, you and the team on the ground in Paris. More coverage to come. To Washington now. President Biden dismisses calls to end his re-election bid. In an exclusive interview with ABC News, Biden said he still has the support from Democrats.
I've met with a lot of these people. I've talked with them regularly. I had an hour conversation with Akeem. I had more time with them than Jim Clyburn. I spent time with many hours, off and on, the last little bit, with Chuck Schumer. They all said I should stay in the race.
Now, also over the weekend, several influential congressional Democrats said on a private call that they want Biden to step aside. Here's what Representative Adam Schiff told NBC's Meet the Press yesterday.
The performance on the debate stage, I think, rightfully raised questions among the American people about whether the president has the vigor to defeat Donald Trump. And this is an existential race. Given Joe Biden's incredible record, given Donald Trump's terrible record, he should be mopping the floor with Donald Trump.
Well, joining us now is our government reporter, Kate Ackley in Washington. Kate, good to see you. I mean, the president says that he spent time talking to one of the names there was Hakeem Jeffries, but of course Hakeem Jeffries brought together a number of very, very senior Democrats yesterday. And there's rising angst in the ranks of the Democratic Party about Biden enduring here, isn't there?
Absolutely. I mean, on Capitol Hill, this is going to be a pivotal week for President Joe Biden and the support that he has or doesn't have among fellow Democrats on Capitol Hill. This is going to be the first time in, more than a week that House members, Senate members are back on the Hill. They're going to be getting tons of questions from reporters, of course, but also they're going to be talking in person, huddling with one another. So we're going to see, what is their response? Is it a fractured response where, like it is right now, where you have a handful or more Democrats publicly calling on Biden to drop out of the re-election race? Or is there sort of, consensus that emerges where they either throw their support behind him or suggest that he get out of the race?
I mean, you'd imagine that this is exactly what Team Trump wants, a fractured Democratic Party where all of the focus is on them and not necessarily candidate and former President Trump. Kate, I find it fascinating to look at who is publicly talking, or who, at least behind the scenes, we know it's talking. It's congressional members, for the most part, are secure in their seats. What does that tell us about the effects of this fractured party on down ballot voting?
Right. I mean, control of the House and the Senate, these are both, held by very narrow margins. The House in Republican control, the Senate in Democratic hands. But, in November, both are up for grabs. And so that is going to be a key part of the calculation among Democrats. Do they think that Joe Biden is a drag on them down ballot? And we have seen some House Democrats who are in very tight re-election races to keep their seats, who have called on Biden to drop out, or who have said that Biden is, going to hurt their chances in November of either gaining control of the House or keeping the Senate.
Well, we know Biden has a busy schedule in the meantime, not least a NATO summit coming up. Kate, thank you so much for getting up early for us. Kate Ackley of Bloomberg Government in Washington. All right, Manis, let's get to some of the other top stories that are trending on the terminal this morning. More in politics, but in Iran, they have elected a reformist president who wants to revive the nuclear deal. The 69-year-old heart surgeon won by almost 3 million votes in the runoff election this weekend. Turnout, though, was below 50%. The U.S. State Department said the low turnout was due to the elections not being, quote, free or fair.
The People's Bank of China has acted to take greater control over short-term borrowing costs. The central bank tightened the band within which short-term rates can fluctuate and will conduct additional open market operations as they're needed, including bond purchases, repurchases.
And Hurricane Beryl has made landfall in Texas after striking Mexico. As of the last update, Beryl was moving north at 12 miles per hour, hitting Texas with strong winds, with flash flooding expected.
Coming up in the show, more from France. The country looks to be headed for political gridlock. We'll get the first take on the French election this morning for New York. Context matters on Bloomberg. France is set for political gridlock after a surprise win by the left-wing coalition in this weekend's legislative election. Pangaea policy founder Terry Haynes writes this about the results. The markets are likely to judge the election's results to perpetuate and maybe accelerate the parlous state of the French economy and potential to create a French analogue to the UK's 2022 Trusses moment. Our guest this morning from Paris is Mabrouk Chetouane, head of global market strategy at Natixis. Mabrouk, thank you very much for being with us this morning. There's just one take on the scenario that this could evolve into a Liz Truss moment. But if I look at the reaction from the bond, the equity and the currency market, the guardrails are up. The worst case scenario for the left really having fiscal power seemed to be contained. Are we right to have such a sanguine response in the first instance?
Well, thank you for this opportunity. Well, clearly the reaction of the market is quite, let's say, calm and expected, because it has started last week when we look at the reaction of the behavior of the bond market. The bond market was, pretty calm, and the equity market has started to rebound. And the pricing, the implicit pricing on the market was, a hung parliament with no majority, no clear majority. And this is exactly what happened. So the scenario of the market is taking place. And what the markets, need is clearly more visibility and more clarification on the coloration of the parliament. So definitely we need to wait a bit more to see what could be, the next prime minister in France, what could be, the color of the next coalition. And so far, we can say that all the scenarios are on the table. But definitely, now the market are reacting quite well, and clearly it's exactly what they were expecting.
Does there still need to forever here with this coalition be a risk premium built into French bonds? Because you still have a spiraling deficit, weak growth, and potentially gridlock, even as it might shake out to be some sort of coalition. Can it really deal with that? Are French bonds still attractive regardless of how that looks?
Well, again, it's pretty soon, to say that these premia will collapse, against the bond, in effect. Because, we don't know exactly what could be, the pattern of the next fiscal policy. Definitely, we need to bear in mind that the French situation is pretty complex. We have already, a deficit at 5.5% last year. And clearly, it's the previous government was already looking for 20 billion euro to finalize, to reduce, the deficit. So imagining that the next government is able to spend more, it's pretty complex. So we need more, let's say, more ingredient to make any assumption on this premia, on this spread between the bond. But definitely, so far, this premia will not disappear because we don't know exactly what will be, the next, fiscal policy implemented in France.
Well, the rating agencies want to see 20 to 30 billion euros worth of savings. The NFP want to spend 194 billion euros if their fiscal plan has any legs at all. So that gap needs to be closed. Let's talk about the flow of capital out of Europe and out of European equities. Does this gridlock raise the spectre of more significant flow out from France and out of European equity?
Well, I think that the situation, the reaction of the equity market has been a bit exaggerated. I would not be surprised to see, inflows in the European market and in particular on the equity market. Simply because, the situation, if there is no clear majority, if the situation remain, stable on the tax front, on the tax policy, this is, a situation where nothing will, deteriorate in the future. So these situations could be, a good excuse, to take the opportunity to buy the French market and to buy the European market. And we have to bear in mind something really important when it comes, to the equity markets, that the investors will start to look at, what will be the earnings growth for next year. And when you look at the consensus, earning growth, when you look at the CAC 40, when you look at the DAX index, are pretty well oriented so far. So we need to stay, a bit confident. And the reaction that we had since, this political episode has been, in my opinion, exaggerated.
Mabrouk, taking a step back here, it is a market, as you're sort of alluding to, that's been whipped around by political risk. I thought Paul Donovan at UBS puts this really well, that it's a problem for markets, that politics is becoming more important to markets, but opinion polls are less reliable as a guide to outcomes. Is there any takeaway from the drama of not French politics, but of markets trading around it as we deal with political risk happening throughout the globe in 2024?
Well, the political risk is a very important topic for the market, because since the beginning of the year, we know that we had different elections, and this one has not been expected, of course, and clearly it is a source of risk for the market. But what I want to say is that investors are more and more used with this political situation. And when you look, at the European countries, coalitions is the majority, is a rule. So we need to live with this situation. In the US, we have the US election, of course, in November, which is not, in my opinion, a risk. So because market get used with this situation.
Okay, Mabrouk, we're going to have to end it there. Thanks for joining us. Mabrouk Chetouane of Natixis here on Bloomberg. All right, let's get you some of the front page news that's making headlines around the world. This won't come as a surprise. The first up, we were just talking about this man, is Marine Le Pen's shock defeat in France. Le Monde, of course, leads with this, as every French outlet and every U.S. one does, but it's the left wing that really surprised us, coming out on top, unprecedented. Now the question is, what kind of coalition formed, and is it gridlock from here?
Yep, so we'll keep an eye across that flatlining and growth. Next up, President Biden remains defiant in the race for the White House. The Journal leads with this. More calls for him to exit the race. You've got private meetings, senior House Democrats, Republicans, including Democrats, Jerry Nadler, Joe Morell of New York, Adam Smith of Washington, Jim Himes of Connecticut, and Mark Takano of California. Again, that coalition of dissent is building, Danny.
And finally, we have to end with this. The FT has this as one of their leads.
I've got a drum roll here.
Paramount has finally agreed to a Skydance merger. The Redstone era is over. I'm most fascinated to hear about what he's going to do to this company. Paramount Plus is bleeding cash. People aren't going to the movie theaters. All the kids aren't watching TV. They're watching YouTube and Netflix. I mean, what is he going to do to turn this around?
Well, he's got another 45 days in which Skydance could actually go and find another studio. So if you think it's all over, it's not all over yet.
No.
But they are going to put $8 billion into this. And I think herein lies the point. If you look at what Shari Redstone said, we want to fortify Paramount for the future while ensuring that content, now listen to this, everybody, content remains king.
Oh, I think I've heard that phrase before.
Yeah, I use it every day. Stephanie Roth joins us. She's coming up with Wolfe Research.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
A shocking surprise in France. A left-wing coalition is headed to victory in a blow to the far right lead Marine Le Pen. Political pressure builds. More Democrats call for President Biden to step aside as he enters a pivotal week of his campaign. And a guilty plea for Boeing. The plane maker admits to criminal conspiracy, readying itself for additional monitoring and a fine.
Well, Manus, 34 record highs is where we find ourselves for this equity market. Can it notch another one today? We are basically flat as a pancake on the S&P 500. Futures down by 0.04%. Oppenheimer's John Stolfus, another upgrade, the second biggest bull on Wall Street at 59,000 rather, right under 6,000 of the highest estimate. Two-year yields, they move up by 3 basis points, but the two-year yield did have its lowest closing level since March on Friday after the jobs report. Finally, euro versus the dollar also flat. For all of the drama in France, Manus, this market is very well behaved because it assumes there is gridlock. But is gridlock really a good thing in this case? They have a spiraling deficit. They have low growth in France. If there's gridlock, none of those problems are going to be solved.
No, but this is going to be uncomfortable cohabitation. I was interested to hear the Natixis, the chief strategist that we just had, going, you're painting this as being sort of something quite shocking in America when really it's nothing shocking at all. It is a shock. The assumption was by the markets that you were going to have Marine Le Pen as being the #1 party. She's not. And the left wing has exceeded. Now, there's got to be horse trading. The bottom line is you could have a state of, let's say, unease for a year, but there's got to be horse trading. And that means at some level, there's fiscal give.
Right.
At some level.
Right. And we're going to talk to Francine Lacqua about this in a moment. But you look at the left's policies and you'd say, of course, the market would be scared by that. And it's currently not.
No, not at all.
But what it wants to spend, 4% of GDP, again, as Paul Donovan puts it, that's equivalent to 2 Liz Trusses, which I'm all here for measuring fiscal spending in measures of Liz Truss.
She will be forever remembered, but in a very, very real sense. It is what could potentially spook the markets. Totally. And for now, the guardrails are up as Marine Le Pen believes her party still has a chance in the next 12 months to get a majority. Take a listen.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with 3 groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
Francine Lacqua is on the ground in Paris reporting for us. Francine, good to see you. So the result has come as a complete surprise to everybody else. Maybe not the chief strategist at Natixis, but what is the mood in France? I mean, will there be Will there be pushback in the streets in terms of the left exceeding more than they had assumed versus the right? What is the mood in Paris? How would you describe it? Good morning.
Good morning to you both. I mean, I think if you're a French person at the moment, you're probably trying to figure out whether it's time for you to go to the streets and riot or protest. So we will probably see a little bit of that over the next couple of weeks, just because a large population, of course, in France, think they've been cheated out because Marine Le Pen did not come into power. But as you say, look, Manis, it's complicated because you don't really have a kingmaker. You don't really know what this coalition ends up looking like, which is why the markets are so relieved. They think, look, if it's a kind of like a hung parliament where they have to cobble to election a coalition, not much will be done. Because remember, it's the far left and the far right that is really spooking the markets because of spending. Now, both of them, with various reforms and agenda, wanted to lower the retirement age, wanted to give more to workers, or wanted to blow up, in certain cases, a system, and that takes money. So we don't have that tail risk anymore on both sides. I think what markets are really underestimating is, look, we have not heard from Emmanuel Macron so far. We haven't heard from him in about 10 days. Where is Monsieur le Président? Will he come out and say something on him standing firm? And if you have a lame duck prime minister, Gabriel Attal, who's of course from Macron's party, who's the chosen one by Emmanuel Macron, saying he'll resign, but he needs to stay caretaker, not much will be done in France for the next 2 months, 3 months, possibly 6 months until they get to act together and find a new prime minister. What does that mean for direct investment? What does it mean for money wanting to come in? So, maybe the market is a little bit too sanguine because there's not really a way forward right now.
Yeah, that's going to be, it's a great point, Francine. Very symbolic. We haven't heard from him after an election where people voted for what they were against, not what they were for. Francine Lacqua in Paris, thank you so much for you and all the teams reporting this morning. Now, let's switch gears to the U.S. because it is a busy week ahead. Just to show you some of what we're going to see, we're going to get Powell testimony both tomorrow and Wednesday in front of Congress. CPI hits on Thursday. We're going to have both PPI and UMich sentiment on Friday. Of course, a lot of data in between that as well, along with weekly jobless claims. Joining us now is Stephanie Roth, Chief Economist at Wolfe Research. Stephanie, thanks for joining us. Great to see you this morning.
Good to be here.
So what's the focus for you this week?
Definitely going to be CPI and then followed by PPI. So we're looking for 0.22% on core CPI, which should put the Fed at another month of core inflation actually close to where they're looking for. So that would put core PC at 0.19 or below, in which case that's another month that's putting them closer to being able to cut in September.
How much more do you think that they need to see to give them that confidence? We've got Powell, his testimony in front of Congress this week. How much more do they need to not be behind? I mean, so the accusation is they are slightly behind the curve at the moment. How much more do they need to sort of take them forward?
If we get the next two prints looking in line with kind of what we saw, it won't be as weak as we got the last month. There were some sort of anomalies. But if we get something like core PCE printing 0.18% month on month for the next 2 months, they can absolutely be cutting in September. The data also have been soft from a growth perspective.
I think this idea of are they behind the curve has been a really interesting one because it's an accusation that keeps coming up. And part of the argument is that they looked at this bumpiness in the data in the first quarter. And so they're looking at the data now and saying, I don't know if I can trust this because of what we saw some in the first quarter. I mean, is there this kind of behavioral bias that does risk the Fed being behind?
I think that's fair. And Powell has been one of the ones out there advocating for this being largely seasonal. So he's been more consistent. It's been some of the other FOMC members that have been changing their tune a little bit. But I think once we get 3 months of really solid inflation data that's consistent with 2% inflation, and with some of the softer data, with Friday's payrolls being consistent with that, we're starting to see a slowdown in economic momentum. It makes sense for them to be cutting in September.
We can't get off this set without talking about politics. We don't know how the next 24 hours is going to go for Biden. We don't really know who's going to be on the Democratic ticket. It could all change again. From the perspective that Danny and I have sat through in bond markets, it's like steepeners are us. That was politics. Then smacked by the data, and it was like reverse. So for me, the bond market is punting steepeners, whereas on politics. Whereas the equity market is just going, just drive on, it'll sort itself out. There's a real difference here between the activity in the bond market and that of the equity market from where I'm sitting.
Yeah, so what you're seeing is the Trump trade has been a steepener to some extent. I actually think it will ultimately be more of a flattener because realistically, if we end up getting significant amounts of tariffs, that's going to slow down the economy and risk putting a real significant slowdown. This wouldn't probably happen until the end of 2025, so we're talking a 2026 type outlook, so it's too early for that trade to actually play out. But that's what I think would ultimately happen if we end up with all of these tariffs that Trump's proposing.
But one of the arguments is also that tariffs are inflationary. Immigration limiting that is also inflationary. Jan Hatzius over at Goldman saying that would result in 5 rate hikes. So what's the interplay between more inflation and weaker growth and how that translates into policy?
So it might not be as inflationary as many people think. So it's inflationary in the sense that, of course, your goods prices are going to go up in a big way, but that's going to hurt consumers, right? At that point especially, we're going to be another 2 years into, or a year and a half into the economic expansion. You're going to probably slow down the consumer in a pretty big way if you see 60% tariffs on China. And as for immigration, we're starting to see labor demand slow down. So if we get to the beginning part of next year and Trump cuts off the humanitarian parole programs that we've put in place, it might not matter that much because we probably don't need all that supply.
Well, it sounds as if a lot of the reversal, the flattener, from the steepener to the flattener, is a back 2025. The immigration that Danny has talked about and the inflation risk is a back 2025. In that interim period of time, you're going to have a Fed potentially that is cutting 50 basis points maybe this year and incrementally next year. Is that the bolstering factor in all of this in regards to the equity market? Does the equity market go on and on and on, to quote Celine Dion, you know, right the way through?
Must, yes.
Yeah, as you do. It's Monday morning. Why not? Let's have a little bit of music in there. You know, that is what bolsters the equity narrative rather than the potential political outcomes that are 2025 back-ended.
I think that's fair. The market, and by the way, whoever wins is probably going to spend a lot. That's what we've seen. Both administrations that may play out in 2025 like to spend in a material way. So that's probably what the market's going to focus on, at least for now.
Can we go back to the jobs data? Because in the break, we were talking about something I thought was really interesting, that overall, okay, it looks softer, not soft, still a healthy market. I know that's your view, but can you talk about the breakdown of jobs and some potential trouble you might see there?
Yeah, I mean, a lot of the jobs have been driven by the acyclical sectors. Government, healthcare. That's what we've seen for the past couple of months, and that's been the case for quite some time, which is a little bit, you know, concerning to some extent. We did see that in the back part of last year, and it ended up getting revised away, and we got upward revisions to the more cyclical category. So it is possible we would see something like that. But this is the one piece of the jobs market that I'm looking at most closely, because you are starting to see a slowdown in retail and you know, some of the more cyclical manufacturing type sectors that it's a little bit less optimistic from that perspective.
Does Goldilocks get indigestion?
Too much porridge.
No, but on a slightly more serious note, you know, we talked about Friday's report being a Goldilocks kind of report, 4.1%. There was some revisions, 111,000 in the April and the May numbers. So there were fissures. And the question is, how quickly does that unravel? It is not, as I said this on Friday, it's not the year 2000. It's not 2008. We're not facing GFC. So this slowdown in jobs could be something a little bit less onerous than perhaps we are used to.
Yeah, I think that's fair. And by the way, 136,000 in private payrolls isn't that bad. It's fairly close to in line with historical averages, right? We don't really want to see payrolls growth of 400,000 again. Like, that's not a good scenario, because then the Fed certainly can't be cutting. So this Goldilocks scenario is kind of playing out. I think people are just extrapolating the trend. And by the way, layoffs aren't picking up. If you look at Challenger Gray, if you look at the JOLTS report, like, that's what we're seeing is a slowdown in hiring, not a pickup in layoffs.
Okay, it's a different side. Stephanie, thank you very much. Stephanie Roth of Wolfe Research, our guest this morning, with some warnings on the job outlook. Well, the Chancellor of the Exchequer for the United Kingdom, Rachel Reeves, is speaking at the UK Treasury in London, laying out the new Labour government plans. This is her first major policy speech as Chancellor. You can pick that up on Live Go on your Bloomberg terminal.
Will be kept to, and they will be delivered on. That includes robust fiscal rules, and it includes our commitments to no increases in national insurance and the basic higher or additional rates of income tax.
It is Bloomberg Brief this Monday morning with me, Manus Cranny, and Danny Berger in New York. More turbulence for Boeing, the company agreeing to plead guilty to criminal conspiracy in connection to 2 fatal crashes on the 737 MAX jetliner. For more, we're joined by Sid Phillip, Bloomberg's deputy team leader and senior reporter for global aviation. Sid, this is perhaps the compromise by Boeing to make sure they don't have to go through a trial. This is financial pain and a metaphorical rap across the knuckles from the regulator. But does it close the issue?
Morning, Manus. So it doesn't quite close the issue because Boeing is obviously signing up. They've admitted, they pleaded guilty, and that sort of opens them up to being a felon, and that makes contracting, especially on U.S. government contracts, much, much harder for them. And so it isn't really easy, but at the same time, it avoids the whole protracted court battle that would have ensued if they had not agreed to this deal.
It's a great point, Sid, because now the Defense Department is going to find themselves in a situation where they're going to be buying things from a felon, from a company that's pled guilty. On the case of their monitor, I mean, some people would look at this and say, why hasn't the federal government do this? Why haven't they done this already? What does it mean for how Boeing operates from here on out? What difference does it make for them?
Yes, Danny, so it is a very complicated situation for Boeing. I mean, they're in the midst of a whole search for a new CEO. They're doing some soul searching in terms of trying to get their quality back on track. And this just adds one more dimension to their struggles. And in terms of what the federal monitor does, I mean, it will mean more oversight on Boeing. It will mean more pain for Boeing. And potentially, it could be something that means that ramp-ups in production and everything are delayed until they can actually get their quality and everything else on track.
Okay, Sid, thank you very much. That is Bloomberg's Sid Phillips. Okay, coming up, we have a busy week ahead. By the way, that includes a new show premiering on Bloomberg today. We're going to bring you the details of that and what's coming up throughout your week here on Bloomberg. All right, let's get you set up for your trading week. Fed Chair Powell will be delivering his semi-annual testimony to Congress. That happens on both Tuesday and Wednesday. Then we're going to get the big data point, June CPI. That is on Thursday. We're also going to round out the week with earnings from JP Morgan, Citi, and Wells Fargo on Friday, Manus, with a lot of data in between.
Yep, well, certainly all eyes down on that CPI. Will the bond market be focused on that? There is a lineup for you. This is what's happening this week. It is the launch of Bloomberg Open Interest, 9 a.m. Eastern every day. And Matt Miller, one of the co-hosts, is with us this morning. Good luck with the launch. It looks like a pretty cool lineup. All about stocks, single stocks.
Yeah, I mean, the idea initially was that we would look at the macro through the lens of the micro. So you can tell a story about what's happening in the company through someone like Smurfit, which makes containers for all sorts of consumer products. You know them well. It's a British company, but they're changing their listing to the New York Stock Exchange. So that's why we have Tony Smurfit on the show today. Or through a company like Lamborghini, of course, one that's near and dear to my heart. Absolutely. I have always covered the automotive sector very closely. And, there's so much talk about, has the high-end consumer hit a ceiling here? Are they needing to step down, for example, going to Walmart, as we heard in the earnings report, to save money? Are they still buying Lamborghinis is the question that we'll put to the CEO, Stefan Winkelmann.
It wouldn't be a new Matt Miller show without a car conversation.
You've got to have the car conversation.
I think our audience would be very confused without that, Matt.
I want them to listen, but we also have, your typical Wall Street superstar stock guests. We have Mike Wilson on today from Morgan Stanley. And we're going to talk to him about, being one of the only naysayers left in this market after Marko Kolanovic left JP Morgan. We're going to talk with Howard Marks of Oaktree and ask him, if there's any if this is at all a target-rich environment in terms of distressed debt. We're going to talk to Maria Feitmana from State Street. Get a bull on the show, as we hit, 34, 35 consecutive records on the S&P. So we're going to definitely be talking about stocks and the stock market at the stock market open. That was the idea.
And I think this is probably an even more prescient time. You look at, Julian Emmanuel, who's calling 6,000 on the S&P 500. It's 34 records in a row. Now is the time when you really need to drill in. What's on the balance sheet? What debt have you got? What's your maturity wall? We talked about the maturity wall time after time after time. So I think even more detail on individual names is probably what this market really, really wants, drilling in to where the CEOs take these companies.
Yeah, absolutely. Looking to see, which stocks you can buy at a very frothy time in the market. I mean, Emmanuel's target of 6,000 was interesting. Mike Wilson says 5,400, but he said it could also equally be 4,500. There's a very broad range. He's got a number of risks that he's looking for. You talked to him on Bloomberg Surveillance, Danny. I watched that interview last month where he said you've got to be worried about higher inflation. If there's a Trump candidacy, you've got to be worried about government spending out of control, no matter who's elected. Obviously, election risks.
You doing any politics today?
Elections are going to be obviously a very big focus for us today. After we got the results of the UK, after we got the results of France, and ahead of the all-important November election.
I think I'm most excited for this show to hear about stocks other than NVIDIA. I'm really thrilled for that. I know you're probably going to cover NVIDIA,
yeah,
but
I mean, I'm sure we'll talk about NVIDIA, but absolutely, there are other stocks in this market. I think there are like 8 or 9 other stocks that we're going to be paying attention to.
There's one downgrade for NVIDIA today. It's like a rare market event kind of thing. What is it? New Street. Apparently, it's getting fully valued.
Oh, haven't heard that before.
There you go. Breaking news.
Finally
NVIDIA
there.
is fully valued, eh?
Hey, Matt, we're really looking forward to catching your show today. Thank you so much. That is Matt Miller. And, of course, you can watch him on our new Open Interest show. Let's get a quick, we were just talking about single stocks, but let's look at this overall market because it is one of stasis at this moment. Even though we have these political disruptions, it is wait and see for the U.S. data this week, whether it can confirm a cut or, I don't know, confirm more slowness.
Yeah, there's also a fairly chunky bond auction coming down the pike this week. You got 3s, 10s, and 30s, 119 billion worth of paper to come, down by 8 basis points on Friday, and that reinvigorated the stock trade. I just wonder to what extent you see, just bear with me on this, you now have a rise of socialist parties in the United Kingdom and in France, and there is a flow of money. Obviously, the great vacuum cleaner for the flow of money has been the U.S. equity market. And as you see this flow of money, potentially there will be a shift in gear from the United Kingdom and from France. And where does that go? Is the U.S. the haven in this political situation, but it has its own sense of chaos as well in politics?
Right. It's the idea of the least dirty most clean, dirty shirt. Exactly. But this is the thing, is what we're seeing in France, what we saw in the UK, it's happening over the world where you're not seeing votes of saying this is who I want to vote for. It's votes against something. Yes. And when you have votes against something, it is just regime shifts. It is changes away from the status quo. And changes away from the status quo also translate into uncertainty. This gets back to what you're saying, Manis. For businesses especially that have been courted by the French government, with banks moving into Paris, with Macron saying, JP Morgan, Goldman Sachs, take your UK business and bring it over to Paris. What happens now? Where now the UK is looking like a relative island of stability.
We'll be pretty sure that the banker's bonus tax cap, which has been removed, that is going to be something that people are going to look at in terms of the United Kingdom. If you look at what that migration of talent and capital and expertise out of London and into France, that's because of Brexit, and there are still very significant reasons for you to continue that. But that banker's bonus cap being removed now with what's going on in France will be really, really interesting to see how it plays out. And it's not going to happen overnight.
No, it certainly won't. By the way, Rachel Reeves has been speaking, the new Chancellor of the Exchequer, some very UK-specific things, ending a ban on new onshore wind projects. They're going to restore mandatory housing targets, but really talking about fiscal prudence. It is clear that they are left, but they have moved more towards the center, a trend we have seen on and on. Okay, that's it for us. Surveillance, that's ahead.